Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys are having a good day. Today, I am recording this intraday, midday. As I record this video, market should be open for another 3 hours. Just letting you guys know that I am recording this intraday. Market should be open for another 3 hours. So looks like market gapped up here. So with that gap up, now we have 3 gaps that are open, and the more gaps the buyer is going to accumulate, the better it is going to be, right? Bears, they had gaps here that got filled quickly. There's that down gap that got filled. There's a big down gap here that got filled. So all these down gaps are filled, and the buyers brought it back up, and in that process it has opened up 3 gaps here, and those gaps are very, very important. And this is how buyers are going to deploy these gaps, just in case, in the event that there's some kind of shenanigan sell-off or something like that. Those gaps are going to provide some cushion and support. Good example of that is just today's Thursday, so just Tuesday. Remember this day right here, right? That was the 6th, so that was Tuesday, right? So remember, out of nowhere we saw this kind of here. Let me explain that, like what I said about gaps, why gaps important. So we saw that shenanigan gap down, right? That was about 2% gap down, right, on the October 1st, right, from here to here, and that's a big gap down. Not to mention, that was a level they were looking at here. That was a resistance level, right? Here, here, here. And we gapped down right on that resistance, 2% gap down while we are still in a downtrend in the midterm, right? That's a high, that's a lower high, that's a lower high, that's a low, lower low, lower low. So we were in a technical downtrend in the midterm. We see 2% gap down on the October 1st or 2nd. Guess where we found support at, right? It was that pivot. I mean, this was obviously very important pivot. Not only that, that's the gap area, and there was actually gap open, and it was a kind of a small gap, so that made it slow down. You see that there's a gap here because this is where market closed. Next day we gapped up. You see that? So there was a gap, and there was a pivot, which is coinciding with the gap area. Despite the fact that we saw 2% gap down in a midterm downtrend, that's some fast, decline, given the fact that there were a lot of fear at the time. But we found support, right? We found support. We saw that in the first hour, how quickly we got up. And then last hour, we hung around there. We're still talking about the October 2nd, and we gapped up. On October 5th, that's a Monday. So this was Friday, that's a Monday, right? So we opened up another gap on Monday morning, and then Tuesday rolls around, we tagged 342, and we saw 2 hours of tankage, right? Everything seemed fine on Monday, and all throughout Tuesday, the market is marching higher. All of a sudden, we hit 342. We tanked hard on Tuesday, but guess where it came down to? We came down to fill that gap, and then we opened up another gap on Wednesday, which was yesterday. After the gap got filled, that acted as support, and that was a level coinciding with what? The moving averages, which we've been talking about this entire week. So now you understand why these gaps are crucial for the buyers. Because there will be shenanigans here. That's a 2% gap down, and that fluctuation, how much was that? On Wednesday night, that was a 2% fluctuation. Keep that in mind. Since the highs during that day to the lows, that's a 2% decline just in 2 hours. That's gonna make some people freak out. 2% in 2 hours, right? So that's a 2% in 2 hours. There's a 2% gap down, as you can see there, right? There's a almost 2% gap down. So 2%, 2%. Both of those declines were saved by what? Gaps. Gap here and gap there. And we've been talking about how market has been cultivating higher highs and higher lows in the short term, right? And we're labeling this market bullish in the short term. And we've been labeling this market neutral to bullish in the midterm. We were bearish until here in the midterm. Because why? We had lower highs. Right? I think I actually became neutral to bearish once we saw gap up and price was trading above my midterm. I don't think I was actually fully bearish in the mid. I was fully bearish in midterm here and here and here. Once I saw get nice gap up, bullish divergence, I was labeling this market, I believe, neutral to bearish. Not flat out bearish. And once we clear this downtrend resistance, I was labeling, I think, more of a neutral in the midterm. I was neutral pretty much. And then at some point, I became kind of a neutral to bullish, right? I think this week I became neutral to bullish in the midterm because my moving average was now what? Rising. My moving average is falling, which is bearish. Right? The momentum is down. We're rising. We were bullish though this entire time, last couple of weeks with the higher lows in the short term, with the higher lows and higher highs. With today's move, we've been talking about this last 2 weeks. What buyers have to do is get up and start surfing it up using the midterm moving average. And then ultimately you want to get up to where? To up here to create and cultivate equal highs. Once we see that, I see this market staying above that, we're going to be labeling this market as bullish. As of today, as of this moment, with this gap up, we have actually, if I move this here, if I actually go to line chart, you see that? You can see a little bit better on a line chart. If I actually go to line chart, these are important highs, right? These are lower highs. This is where things got really, really hectic, right? These peaks here, that's 342-ish area. And I've been talking about how you want to reclaim 341, 342 area before we can neutralize this downtrend. And today, we've done that. Right? We've done that. So, with this gap up, even if this thing comes back down, fill this gap, right? That's still a good cultivation because we can clearly see that's a subtle higher high looking at this as high, and this is potentially that subtle higher high. I mean, you're really going to put the nail on the coffin if we see higher move and then something like that, then that's very definitive higher high. We have just little subtlety now, but that's giving us the early signal the market is preparing to make its move to the upside, right? So as of today, as of this moment, with the data that is at hand, obviously we're bullish in the short term, right? And you can see that last couple weeks, this market has been cultivating higher lows. And this is why it's important to understand these things so you don't just start freaking out every time we see a 2% down day or 2% fluctuations each day, right? You can go back and check what I was saying in October 2nd and just this week, October 6th. Actually, I'll put those videos at the end of this video, the October 2nd and October 6th. So now that we're staying up here, short-term bullish, this is another higher high, correct? Yes. We got higher highs here in the short term. In the midterm, we're no longer in a vicinity of a lower high. These are lower highs right here. That's not lower high. That's what I call eco highs. So in the short term, I'm bullish. In the midterm, I'm leaning more bullish. I don't want to give full-blown bullish yet in the midterm. I want to see a little bit more. And then it will be bullish, right? I want to see a little bit more move. So what I'm going to do is I'm going to do neutral to bullish today in the midterm. Neutral to bullish. So short-term bullish, midterm neutral to bullish, but a little bit more on the bullish side. If we see further move tomorrow, right? Tomorrow's Friday, or sometime next week, we can give it full-blown bullish there at that time. Let's check out that oscillator here real quick. Actually, before we look at the oscillator, I want to tell you guys that this gap is good, but bears can still make some damage here if they can gap it down and turn this into an island top. With that kind of move, you could probably see this market coming back down, potentially challenging this gap at 338, 334. Even if the price comes back down to 337 or so, anywhere in this vicinity, I'll still have to give it neutral to bullish in the midterm because of the cultivation. Maybe not more, maybe at the time it'll be half neutral, half bullish. Right now, I'll say, 1/3 neutral, 2/3 bullish. And if the price, let's say, gaps up on Friday or something like that, or Monday, and we see an island top, and this thing comes back down to, let's say, fill this gap somewhere here at 335, 336, I'll still be half neutral, half bullish, despite the fact that we see a down move. Do you understand that concept, right? Same reason why I was still bullish, in the short term, despite the fact that these pullbacks, maybe I was neutral to bullish, but I was still leaning towards bullish, and I've been talking about them the last couple of weeks. So you have to understand, just because when you see a down move, all of a sudden you don't change your overall stance in the market just because of one day or a couple hours of fluctuations. Obviously, we were bearish down here. I mean, when things were looking pretty hectic with the lower highs and lower lows, my midterm moving average is declining here, right? And we clearly had downtrend with these lower lows and lower highs. Things have changed. We got some good cultivation, very constructive move the buyers have done in the last couple weeks. Let's check out that oscillator here. So the oscillator is finding support here. We cross, making a move. We're getting near to that level where buyers might be tired. We got a little bit of room though, but this is a level where, this is why I kind of mentioned that if we do see, it would be better for the bears gapping it down below 340 to make this into an island top and then go after this gap. But if bears just come and fill this gap, we will find support in that vicinity, right? That's why gaps are important, because we'll find pretty strong support in 340 and 341. I also have my short-term moving average hanging around in that vicinity. So you can see if buyers want to utilize, there's a little bit of room, little bit more room that bulls can push tomorrow. But we're kind of getting into that level where buyers are kind of getting tired. But you see how they've been building momentum here. You see that how we're not coming all the way back down to the bottom of his band, but we're stopping short. We saw something like this happening back in May before the June rally, right? So as long as this thing continues in this fashion, we don't know how long it will continue, the market could continue to stay in a bullish uptrend. So I'll come back for you guys tomorrow morning, tweet things out if I see anything. But tomorrow night, we'll do the market update video where I'm going to be looking at other indices. We'll look at the daily chart, look at the overall picture, look at a little bit more longer term. We'll look at Bitcoin and gold and kind of get a little bit more comprehensive analysis that I'll do tomorrow night for you guys. Enjoy your evening and good luck trading tomorrow.